Good evening and welcome everyone. I am Divya Gopalakrishnan and on behalf of CareEdge, I welcome you to our today's discussion on energy storage segment, Catalyzing Clean Energy Development. We sincerely appreciate your time in joining us for this webinar. We would like to welcome our esteemed guest speakers for today. Mr. Rajat Gupta, Chief Financial Officer, Avaada Group, Mr. Rohit Chandak, Chief Financial Officer, Ayana Group, Ms. Rewati Deshpande, Head Finance, Renewable Energy Business, ArcelorMittal Green Energy Private Limited, Mr. Pranab Sinha, Executive Director, Power Finance Corporation. This session will be moderated by Sabyasachi Majumdar, Senior Director at CareEdge Ratings. We will commence this session with a presentation by Jatin Arya, Associate Director at CareEdge Ratings. This will be followed by a panel discussion and a Q&A session. In case of queries, participants are requested to key in your panel. We will take up your queries post our panel discussion session. Now may I invite Jatin to make his presentation, please.
Thanks, Divya, for the introduction, and good evening, everyone. The topic for today's webinar is how energy storage is catalyzing clean energy development. Variable renewable energy sources, such as wind and solar, are being connected to the grid at a very rapid pace, owing to their low cost of installation and the thrust on sustainable and green energy. But standalone plain vanilla solar and wind projects, are not enough to meet RTC power requirements of the consumers, given their intermittency issues. Hence, there is a pressing need for development of energy storage systems which can enable variable forms of RE become dispatchable on a 24/7 basis. The two major storage solutions that have emerged, especially in India, are pumped storage projects and battery-enabled storage solutions. In today's webinar, we'll try to understand the overall progress we have made thus far in the energy storage segment, along with the key sector-specific trends, policies, and issues. So the content flow that we have in today's webinar, that includes the following. First of all, we'll be sharing some updates on the overall RE sector, then concentrating on the RPO and ESO trajectory that's been laid down. Thirdly, we'll be moving on towards the key technologies, that is PSP and BESS, and doing a comparison between them. Fourthly, we'll highlight the key policy initiatives that the government has come out in the storage domain. Fifth point would be the tender activity, that's the tenders that have come out in this space. And lastly, we'll speak about the CareEdge ratings outlook on the overall RE sector. So moving forward, just to give a brief background, so as reflected by Exhibit 1, the total RE capacity of India stood at 134 gigawatt as on December 2023 end, as against 110 gigawatt as on March 22 end. The solar segment continues to be the major contributor in the overall RE mix, with India's solar capacity standing at 73 gigawatt as on December 2023 end. If one looks at the share of RE as a proportion of the overall power generating capacity, that's increased from 18% in March 2017 end to 31% as on December 2023 end. And this has primarily been attributable to three major factors. First, the strong policy focus of the government. Secondly, the superior tariff competitiveness that RE now enjoys vis-a-vis the other forms of generation. And thirdly, the strong investor interest in this segment. So as demonstrated in Exhibit 3, the solar power segment remains the key driver of the capacity addition in the RE sector, with significant additions over the last 6+ years, which in turn has increased its share in the overall RE mix to 55% as on December 2023. So despite RE constituting about 31% of the overall energy mix, its contribution in the overall generation remains subdued at 11 to 12%. That is primarily on account of the intermittency-related challenges. And as demonstrated in Exhibit 4, India installed 15.6 gigawatt of RE capacity in FY23, which is 3% higher on a YOY basis. In the current fiscal, we've installed 8.7 gigawatt capacity till December 2023, and Care Ratings expects another 10 gigawatt of capacity to come on in Q4 FY24, and that would primarily be driven by the ALMM exemption that is only available for solar projects that get commissioned before March 31st, 2024. Henceforth, in FY25, we are projecting the capacity additions in the overall RE sector to catapult to close to 25 odd gigawatt, given the healthy pipeline of 75 odd gigawatt. Moving forward to the RPO and ESO trajectory that's been laid out. So in October 2023, MOP notified the RPO targets for the designated customers up till March 2030. The subsegments of the new RPO targets consist of wind, hydro, a new component of distributed renewable energy, and others. Only the procurement from wind and hydro projects commissioned post March 2024 would be eligible to meet the respective subsegment targets. And for a project to comply with the requirement of distributed RE, its capacity must be less than 10 megawatt. Also, previously in July 2022, MOP had introduced the ESOs, that is energy storage obligations, as a separate component, and all the obligated entities had to ensure sourcing of some RE wherein there is an involvement of storage. The ESO targets have been kept at 1% for FY24, and a linear increment of 0.5% has been mandated till FY30. As per CareEdge Ratings, the country requires around 12 gigawatt of storage capacity, assuming 4 hours of storage per gigawatt in FY24, and this requirement would increase to 70 gigawatt by FY30. The escalation in RPO targets and introduction of the ESO targets are steps that augur well for taking the overall non-fossil fuel-based capacity to 500 gigawatt by 2030, while also providing the necessary impetus for inclusion of storage in the overall energy mix. As depicted through the Exhibit 7, India had an installed power capacity of 435 gigawatt as on FY23 end. The same comprised fossil fuel capacity of 246 gigawatt and non-fossil fuel-based capacity of 191 gigawatt. Exhibit 8 reflects the contribution of these two sources in the overall generation mix. Fossil capacity comprised 77% of the overall generation, and the non-fossil comprised the remaining 23%. So CareEdge Ratings has made an attempt to forecast the future capacity as well as the generation mix, assuming non-fossil fuel capacity to increase in a phased manner and reach 400 gigawatt in case 1 and 450 gigawatt in case 2, while assuming the growth in energy demand at a CAGR of 6%. We expect the nameplate non-fossil fuel capacity to overtake the fossil fuel capacity by FY27 in both the cases. Further, the share of non-fossil fuel generation is expected to exceed 35% of the overall generation, even if we achieve an installed non-fossil fuel capacity of 400 gigawatt. Moreover, as per CEA, by 2030, India would require 19 gigawatt of PSP and 42 gigawatt of BESS. And in totality, as per our estimate, the capex on RE plus storage till 2030, the incremental capex, would be roughly around 19 lakh crores. So this would necessitate debt funding requirement up to 14 lakh crore, rupees 14 lakh crore, if India has to achieve these staunch targets. Focusing on the key technologies that have emerged, so the two leading technologies, the PSP and batteries that have come up, these are the mainstream mediums for energy storage. In this slide, we've tried to draw a comparison between the key characteristics of both the technologies. BESS on a relative basis has a shorter gestation period of 1 to 2 years as compared to 5+ years for a PSP. BESS has lower land requirement, is agnostic to project site characteristics, and can also be utilized for distributed generation. However, batteries are exposed to disposal-related challenges, whereas PSPs offer a much cleaner alternative. PSPs, on the other hand, have a longer project life, have long global track record of performance, and are more cost competitive in the present scenario. However, these projects are customary to witness escalations given the long gestation periods and exposure to commodity prices. Also, PSPs are exposed to rehabilitation and resettlement related challenges as they require contiguous parcels of land for operations. Moving on to the key supportive policies that have come up in the storage domain. So the government has issued several ESS policies to promote energy storage and attract investments in this space. Some of the key policies that have come out in the last 12 months include the following. In April 2023, the government came out with the guidelines for promoting pumped storage projects. Thereafter, in June 2023, guidelines were released for procurement of power through the firm and FDRE route, that is firm and dispatchable renewable energy route. There was also a national framework for promoting energy storage systems, a report that was released in August 2023, and viability gap funding for battery projects was released in September 2023. We'll speak in some detail about all these three policies, these major policies. So first of all, sharing our views on the PSP framework. The PSP framework had the following key takeaways. The first being allotment of sites. So the state governments have the rights to allocate sites through various methods, including nomination basis to CPSUs and state PSUs. Further, states shall charge no upfront premium on allocation of project sites. Further, there is no obligation, unlike hydro project, there is no obligation on PSPs to supply free power to the home state, except for the monsoon months. Further, PSP and other storage projects shall also be allowed to participate in all market segments of the power exchange so that they can take suitable advantage of the price differential between peak and off-peak tariffs. States have also been advised to reimburse the state goods and service tax on project equipment and stamp duty on the acquired land. Lastly, there's also a complete waiver on ISTS charges for projects wherein the construction work is awarded prior to June 30th, 2025. Post that, ISTS charges will apply, however, in a phased manner. Moving on to the FDRE guidelines, the government, through various interventions in the past, has alleviated the risks associated with plain vanilla solar and wind projects. Some of them include measures for arrangement of land and evacuation of infra, particularly through RE parks, supporting building of green energy corridors, standardizing PPAs, as well as elaborating the mechanism for risk apportionment and compensations in various scenarios, which are not limited to backdowns, unavailability, or grid infrastructure, along with formulating a mechanism for payment security. With the expected increase in storage-based tenders, MNRE has formulated guidelines to ensure standardization of key terms across various tenders, and some of the features of these projects include fixation of trading margins at 7 paisa per unit in line with the plain vanilla solar and wind projects, fixation of a minimum PPA tenor of 20 years, which can be mutually increased up to 25 years, permitting 5% of the contracted power to be sourced from bilateral agreements, including exchanges, and penalizing developers for any shortfall during the peak period at the rate of 1.5x the tariff multiplied by the shortfall in the generation. Lastly, speaking about the VGF policy for BESS, in September 2023, the government launched a VGF scheme for development of 4 gigawatt hour of BESS by FY31. A VGF allocation of up to 40% of the capital cost up to a cumulative amount of rupees 3760 crores has been permitted. The VGF shall be disbursed in 5 tranches linked to implementation. So to ensure that the benefits of the scheme reach the customers, a minimum 85% of the BESS project capacity that will be set up in this scheme will be made available to the DISCOMs. So this VGF scheme is targeted to reduce the levelized cost of storage and bring it down between rupees 5.5 to 6.6 rupees per unit. In our opinion, all these initiatives are expected to act as great stepping stones for creating a robust energy storage landscape. Moving forward towards the battery price trend that's been witnessed. So as depicted by Exhibit 9, the battery prices have witnessed a negative CAGR of 16% from 2013 to 2023. This has been possible on account of a notable increase in manufacturing capacity in every stage of the battery value chain, right from raw materials to components to cells to packs, along with a precipitous decline in the prices of important battery metals. Primarily, we are speaking about lithium in this case. Despite the decline in the prevailing battery prices, the overall cost in our as per our estimates comes to around rupees 3.25 crore per megawatt hour, thus rendering the levelized cost of storage through this medium costly. Moreover, in India, the import of batteries is subject to a custom duty of 22%, apart from an 18% GST, thereby taking its landed cost even higher. As per Bloomberg, the annual global BESS installations in CY23 stood at 74 gigawatt hour, and going forward, the annual BESS installations are expected to grow at a CAGR of 34% over 2023 to 2030, taking the installed capacity to around 1800 gigawatt hour by 2030. Further, as per our National Electricity Plan 2023, India's storage capacity requirement from BESS is projected to increase to 208 gigawatt hour by 2030, comprising roughly 11% of the global BESS installations. Moving on to, we'll speak about some of the key tenders in the market on storage. So, while multiple bids wherein it is mandatory to have an energy storage component have come over the years, in this slide, we have primarily focused on 2 tenders wherein the underlying projects are in an advanced stage of execution. The first project we wanted to focus on was SECI's peak power bid for 1200 megawatt, which was concluded in January 2020. So some of the key features of this tender included fixation of off-peak tariff at rupees 2.88 per unit, requirement of a minimum CUF of 35% of the allocated capacity, requirement to supply at a CUF of 50% for 6 hours in a day. So that is for a total capacity of 1200 megawatt, the peak power requirement was 3600 megawatt hour, and this was spread across 6 hours. So two groups having different strategies, that is Renew and Greenco, emerged as winners, with Renew fulfilling the peak requirements through BESS and Greenco through PSP. And the lowest bid tariff was 6.12 for the non-peak hours. While Greenco is using only solar power to pump the water in a PSP, Renew is using a combination having a very high dependence on wind subsegment. The second tender we would like to refer is SECI's 400 megawatt round-the-clock tender, which was concluded in May 2020, and Renew emerged as the winner. The key condition in this tender was that the developers had to maintain a minimum CUF of 80% on an annual basis and 70% on a monthly basis. So the levelized cost that emerged in this tender was around 3.6 rupees per unit. And the strategy that is being adopted by Renew is to significantly oversize the plant with wind and solar capacity and use some proportion of batteries in the overall mix. Given the reliance on batteries, there will be a requirement of augmenting the batteries during the tenure of the contract, and this would warrant subsequent capex as well. Moving on, it's been observed that the proportion of tenders wherein storage is a part of the overall requirements has been increasing. The same is also reflected by the fact that out of 20 plus gigawatt capacity awarded during calendar year 2023, around 4 gigawatt of capacity had a storage component. So the four key bids awarded last year are shown in Exhibit 12, and the determined tariff was sub rupees 5 per unit in 3 bids, whereas the determined tariff in 1 bid was rupees 6.69 per unit. So the determined tariff was higher in the RUVNL bid, and that's primarily down to 3 factors. One, relatively weaker counterparty as compared to the central off-takers in the other 3 tenders. There was a higher energy requirement during the peak hours, that is 3 hours of peak power production was required in RUVNL tender as against 2 hours in the other 3 tenders. And lastly, the penalties for a shortfall in generation in the RUVNL tender tantamounted to around 2.5x the PPA tariff, whereas in the other tenders it's between it's either 1.5 or 2x. Moving on to the current bids, so the current outstanding tenders, the focus on energy storage looks to be sustaining as there are storage projects of 9 plus gigawatt wherein tenders have been released. While each tender has its own uniqueness, CareRatings expects the average determined tariff to be in the range of rupees 4 to 5 per unit in these tenders. Moving forward, coming to the comparison between PSP and BESS from a financial standpoint. So in Exhibit 14, what Exhibit 14 is depicting is we have made a attempt to illustrate the movement in the cost of storage in rupees per unit at various cost levels for a project. So we have assumed the PSP capex at rupees 6.5 crores per megawatt, which is to be funded in a debt equity ratio of 75:25. For a PSP plant, which would have a capacity of a storage capacity of 6 hours. So the levelized cost of storage, excluding the cost of input power, comes out to be around 4.8 per unit. And if the capital cost increases to 7.5 crore per megawatt, the capital cost of storage would increase to rupees 5.5 per unit as per our assessment. Moving forward, Exhibit 15 represents an illustration, a similar illustration for a BESS project. So over here, we have assumed the cost of we have tried to look at the cost of storage in rupees per unit at various levels of project cost for batteries. So CareRatings has assumed a battery capacity of 400 megawatt hour with an average operational cycle per day at 1.5. So this we have done to facilitate a relative comparison with a 100 megawatt PSP project offering 6 hours of storage. So now both the BESS as well as PSP offer roughly 6 hours of storage for a 100 megawatt capacity. So the capital cost of battery driven project has been assumed at rupees 3.25 crore per megawatt hour. The number of cycles in a battery has been assumed at 6,000 cycles, and augmentations to the overall battery at the end of every 5 years has been taken, given the storage requirements are applicable for a full tenure of 25 years. Further, what we have assumed is that BESS capital cost would decline by a CAGR of 5% on an annual basis. So the levelized cost, excluding the cost of input power from a battery, comes down to somewhere at around 11.6 rupees in our base case. Now comparing both these alternatives, assuming that there is a requirement to supply 20 hours of RE in a day, That is, the CUF requirement would be in excess of 80% on an annual basis. This has to be met through a combination of variable RE sources as well as a storage component. So it has been assumed that power from energy storage will be supplied for 6 hours and variable renewable energy will be used for the remaining 14 hours. So the levelized cost from PSP comes down to around rupees 4.7 per unit, whereas the levelized cost from BESS comes to around rupees 6.6 per unit. Thus, at present, especially if one has to provide storage for longer durations, PSP seems to be the more preferable option from a cost standpoint. However, the balance can change if there is an introduction of VGF or other capital incentives on BESS beyond the existing VGF. Further, if there are any reduction in duties and taxes on batteries. Another point to be noted is PSPs, given their longer gestation period, are prone to witness time and cost overruns. This, coupled with a reduction in battery prices, can swing the balance between both the technologies. Lastly, sharing our key takeaways as well as the outlook on the RE sector. First of all, on the key takeaways, the investor interest in the segment remains buoyant, with multiple large groups winning capacities in various storage auctions. The government remains focused as exhibited through various policy initiatives. And lastly, despite the decline in BESS prices over the last decades, PSP remain as more preferred and economically viable storage options in the present day. However, BESS offers a unique proposition as it can be adopted for distributed generation. Coming on to the outlook on the RE sector, the outlook on the overall RE sector remains stable on account of superior tariff competitiveness, strong policy focus of the government, as well as presence of strong intermediary counterparties. Also, the growing focus of corporates on decarbonizing their supply chains is creating sufficient demand for the renewable energy segment. That's all from the presentation point of view. Thanks a lot.
Thank you, Jatin. As conveyed earlier, all attendees are requested to key in their questions, which we will take up post our panel discussion. Now, may I invite Sabyasachi Majumdar to take over the session, please. Sabyasachi Majumdar is a Senior Director, Ratings, CareEdge. He has over 25 years of experience in credit rating and sectoral research across diverse sectors such as power, renewable energy, cement, sugar, chemicals, oil and gas, etc. He is also an alumnus of IIM Lucknow and Delhi College of Engineering. Over to you, sir.
Yeah, thank you, Divya, for the quick introduction, and Jatin for a wonderful and comprehensive presentation. Good evening and a very warm welcome to one and all who have joined us today for our webinar on the Indian renewable energy sector with a special focus on storage. It's very clear that if RE has to account for a much larger percentage of the total energy mix, storage will be very critical given the intermittent and variable nature of these energy sources. However, storage is still a very nascent service in the Indian context, and to many of us, the risk factors pertaining to storage are not fully understood yet. So we need to understand what needs to be done to de-risk the sector so that we can attract more investments. That apart, there is also a question as to which is the most appropriate technologies to be used. While these are tricky questions, we are fortunate in having with us today undoubtedly some of the best minds from the industry to answer these questions and share their valuable perspective with us. I would like to introduce you to our esteemed panelists in alphabetical order. Our first panelist today is Mr. Pranab Sinha, ED Projects Power Finance Corporation. He is an electrical engineer who also holds a degree in MBA Finance. He has more than 35 years of experience in the power sector, of which 30 years are with the PFC. Mr. Sinha has been playing a key role in business development, project appraisal, financial modeling, project monitoring, and stress sector solution. Welcome, Mr. Sinha, to our.
Thank you, Sabyasachi.
Our next panelist is Mr. Rajat Gupta, CFO of Avaada Group, a renowned chartered accountant and alumnus of the University of Delhi. Mr. Gupta is leading the finance function at Avaada Group as its CFO. Mr. Gupta has a wealth of experience in sectors such as renewable energy, telecommunications, healthcare, and real estate. During his long professional journey, he has associated with leading organizations like Sprung Energy, Austro Energy, Avanta Group, Wellspun Energy, and Unitech Group. Welcome to our webinar, Rajat.
Thanks, thank you.
Our third panelist for today's session is Ms. Rewati Deshpande from ArcelorMittal. Chartered accountant by profession, Ms. Deshpande brings with her cross-functional knowledge from various industries through her senior level professional expertise of over 20 years. She's a reputed international speaker at various prestigious forums across the globe. She has a deep insight into various industries, which include renewable energy, banking, consulting, textiles, steel, refinery, tires, and power, to name a few. In her current role, she is heading finance of the renewable energy business for ArcelorMittal Group. Welcome, Ms. Deshpande. And
Thank
finally,
you.
let me introduce you to our fourth esteemed panelist, Mr. Rohit Chandak, CFO of Ayana Power Private Limited. Rohit is the CFO since 2017. He has experience of over 15 years covering various aspects of M&A, CFO functions, infrastructure investment, PPP, and project financing in India. Rohit is a postgraduate in management from IIM Indore and a Bachelor of Commerce from the Delhi University. Welcome, Rohit. Without further ado, let's get rolling with the
Okay.
question for the day. So, I have a common question to all the three developers here, and I'll begin with Rajat. My first question is, in your opinion, what are the key sector enablers which can accelerate the installation of storage solutions and ensure quicker integration of BESS and PSP in the grid, especially given that we have a limited track record in operating these projects? Secondly, what are your thoughts on battery storage vis-a-vis pump storage? We have shared our perspective, but we would also want to know what are your perspective on the relative attractiveness, advantages, and disadvantages of these two energy sources. So we will begin with Rajat. Over to you, Rajat, please.
Thanks, Sabu. Look, I think one thing is very clear that with the penetration levels of renewable, which are already 12 to 15% in country, and with the further focus of the RE, any further increase in the generation, RE generation would lead to, integration of grid a more challenging aspect. And hence, that's where this need for storage comes in. All right. The real issue is on the capex. The cost is very high and lead to the cost of generation very high, and therefore, so how do you optimize the cost? And second is the technology, especially technology in respect of the batteries. Okay. As you have highlighted in your presentation, the government has taken some initiatives in terms of demand creation by making, the storage purchase obligations as part of the RPU guidelines. I think that's a good starting point. The real issue is that, how do you make the storage affordable? Unless until you make storage affordable, we won't see much of a storage addition. We have seen a trend that recent tenders which have come out, okay, many have gone, under subscription. All right. One of the initiatives taken again by the government is to introduce VGF on the battery storage side, right? But can the government consider VGF for PSP? That's one aspect which can be considered. So affordability in terms of bringing down the cost of generation by bringing down the capex. The capex is also an aspect of, especially for the PSP, the long gestation, right? So itself about 2.5, 3 years is the gestation period for a PSP. And if you couple with the aspects of environment clearances, the creating access, road accesses, the networking, that my sense is it increases the gestation period even, somewhere like 4 years or so. Okay. And if you look at some of the 6 projects which were recently analyzed by the, MNRE, almost 76% of the projects required both the lower and upper reservoir construction and, long gestation period because of the rehabilitation involved, right? Some of those aspects can also be considered, all right? So while the government is trying to say that, yes, we will allocate the closed loop projects, which doesn't utilize any local resources, on a first come basis without going through a, competitive bid or something like that. But still a lot of work to be done, in the pump storage side. Okay. And batteries, of course, are related faster to install, then cost is very high. Okay. Apart from cost, the other issue for batteries is the scale and size of those batteries, where they can provide the stationary grid applications. So batteries which are available today are very small in size, to meet the 4-hour peak power requirements, you have to really install large batteries. Okay. So coupled with the cost and the scale and size of the batteries available, it becomes really challenging. So one aspect can we make some development on the indigenous technology, All right. So I think these are the issues which we see, so ultimately the bottom line is on the affordability. How do you make it affordable?
Thanks, Rajat, for your perspective. Ms. Deshpande, I would like to have your perspective on this. You broadly agree with Rajat, or there are some additional points that you want to bring to our notice?
Yes, I agree with Rajat. Of course, cost is always going to be a key criteria here. And with the capex escalations that are likely to come up through in construction of the large PSPs, definitely that will be a key concern, even when the PPAs get finalized. And yeah, I think that is one of the key considerations the industry is going to always look at. Any storage solution, I think all of us would agree it needs working towards peak shifting. So I think from that perspective, PSP, the hydro storage pump facility is essentially, it's a longer duration storage solution, unlike BESS. And the longer duration energy is essential for round the clock energy supply. So I think from that perspective, for the industry to efficiently migrate towards renewable energy and the net zero goals that we have adopted as a country, I think RTC power is going to be essential. And thereby, I think just by the nature of the longer duration storage solution, which PSP offers, that is a little more superior to BSS. But then, of course, Rajat described the limitations therein. BSS, on the other hand, it significantly would enhance power system flexibility. We would have in the context of integrating the renewable energy to the existing power grid. So I think from that perspective, BSS could be more effective in securing integration, and we can possibly move towards a greater RE power capacity into the grid. This is all good, but I think there definitely are some constraints that we are looking at with respect to restrictions and lack of clarity around if and how storage can be used across generation, transmission, and distribution roles. This can make it difficult for both the storage providers and the industry to operate. So there would be a need for clarity on rules and regulations with respect to the role of BSS or PSP, which would help smoothen out the contracting arrangements as well. That would help have clear deliverables and more efficient and enforceable PPA. So regulatory support is clearly required. Policy intervention might be required to allow the storage to get seamlessly integrated with the grid, technically as also in terms of costs. As on date, there are several aspects which keep coming up with newer regulations, and there's non-clarity sometimes with respect to charges, costs, taxes, just to name a few. And then the variety of different services that the storage can provide. Also, often we want to see if this can cut across multiple markets, and whether there can be any kind of compensation sources that can be thought around. That being said, battery and storage systems are, of course, an emerging technology. With cost being the key criteria here, it might exhibit more risk for investors than the conventional generator investments that have been initiated. More from the technical aspect, because they may be less understood by the stakeholders, and they might be changing faster than other technologies, as also with potential policy changes that would impact incentives, etc. So the gaps in the data and the analysis capabilities, and maybe the lack of adequate tools to measure it, that could also potentially deter investments. Not as much a challenge, but yeah, I think some technology transparency also could be key for enabling growth in the sector.
Yeah, thanks, Ms. Deshpande. Rohit, your views, please.
Yeah. So, Sabyasachi, I think in terms of the comparison for BESS and PHP, I think Jatin has done a fairly comprehensive presentation. I must compliment him. So I don't want to repeat that. And of course, the points that Rewati and Rajat have covered are very pertinent. We agree that yes, cost is a constraint. But I think given where we are as a country, it's actually not an option for us. We have to migrate to RTC power going forward if we want to continue our foray into the renewable energy. So therefore, We have to figure out solutions for this. Agree, the cost right now is prohibitive, but we don't have honestly any other option. Now, in terms of the key enablers, what is it that we can do? So if you look at the stakeholders, what is a key enabler for a sector? If all stakeholders are coming together and saying, yes, this is making sense, then we have the enabler. So if you look at it right now from a consumer perspective or a developer perspective, people want to do RTC power, consumers want it. But still, if you look at it from the enablers, what is it that government can do to help the sector? Now, we have seen there are policies which have come in piecemeal, trying to cover certain aspects of the storage. What actually we need, and I think I must appreciate that at least government has taken due attention to this particular aspect, that for grid stability, we would need storage, we'll need RTC power, and therefore they've started thinking into it. But probably we need to stretch ourselves a little more and not look at just next 3-4 years or time. We should look at a larger time period and have a roadmap for grid stability with RE power. And this has to be done at a substation level, that where do we expect additional capacities will come up, where we will have grid stability issues, and therefore what are the solutions possible. Now, I agree that yes, while battery today for a utility scale project is not an option that any customer would like to take, and given an option, they would like to go with PHP. But this is, I think, something which can turn into an opportunity for government. For example, what we have been suggesting is that rather than having storage at the project level, we can have storages at the substation level also. Let us identify what are high RE zones, substations where there is a lot of RE capacity going into the grid. There can be battery storage at the grid itself, so that they can balance power, which is after accumulating 6-7 projects which are coming there. This would be much cheaper. This will bring in economies for the overall sector and the country. And given the pricing, government can do a direct tender for batteries, which can be installed at a grid. So because the core objective is not having storage at the project level. The core objective is to ensure grid stability, to be able to supply RTC power, which can be achieved through this. So the point that I'm trying to drive is that if we have a roadmap and a vision for how we integrate storage in our power system over the next, say, 10, 20, 50 years, then we will know what are the points where we need to bring in these interventions. So it has to be something where both the parties act together and we bring in this particular solution. And coming back to the other stakeholders, see, there are minor issues with respect to facts like, clarities on GST, having more tenders, or extending the ISTS waiver for these kind of projects beyond June 2025. Of course, if you ask industry in terms of what government can do, there'll be a long list which people will have. But if I have to drive a core point, if you talk to people right now who have to invest, lenders or investors, people want to look at an ecosystem where you have storage there in the system across the board. Right now, what you have is there is heavy dependency on one technology or one project, which is not good for a country. Okay, if you look at what is happening on all RTC projects today, we are actually dependent on one large project which is happening in the country at least for the next 2 years, which is not good. We need to have a situation where there are multiple technology, multiple options. It's like storage is available as a service. The way we switch our mobile operators, you can switch that. That should be the vision with which we should work. And we have to get the ecosystem to that level. That is when you will see that storage and RTC becomes mainstream.
Thanks. I think the message that I'm getting from the developers here is that they are very clear that RTC and storage are going to be there to stay. We have to move towards that. But it seems that they are mindful of the risks, and also, possibly that we'll have to have a mix of, a battery as well as PSP, and further regulatory and policy support would be required if you have to push up storage in a meaningful way. So that now, takes me to Mr. Sinha, your perspective as a lender. How do you see it as a lender? How do you see it? That uh, is the lending system comfortable funding these projects? I mean, Do the lenders feel that they understand what are the various risks which are associated with storage? Are they optimistic about taking exposures to this segment? We would like to hear your view, because you're the only lender here.
Well, thank you. From the lender side, we are very optimistic that we look at this storage business in a big way that is coming up. You see, when we have an ambitious plan of around adding around 500 gigawatt by 2030 in renewable sector itself, which varies during the daytime or during between seasons. So there has to be a storage system in place to have a stable power supply to the system. And that is something which is very much required, what we look at. And we look at around, say, if an investment of around, say, what in the presentation Jatin had said that an investment of more than around 19 lakh crore is projected in the renewable sector. A corresponding investment in the storage system is also required to be invested. So from the lender's perspective, we see that there is a huge business opportunity for us also from the lender side. But at the same time, of course, as you said, there are various risks involved in these storage projects. The two type of projects that we have been discussing, one is that PSP and another is the battery cell. We look at both the things in a different way. Both the things are totally different in perspective. Like PSP has a gestation period of more than 4 years. See, if you look at it, around 3 years of implementation period, and the in addition to that, 1.5 year to 2 years for various clearances and all. So 4 to 5 years is something that is the implementation time for a PSP project. Whereas as a battery project, it's maximum 1 year time, which is required to be implemented. And the bids that are coming up, there one has to participate in for RTC. What we feel that there can be a bids in a two separate part. One for PSP needs to be separate, because a PSP project can come up if you have a planning for 4 or 5 years. As a lender, when it comes to us, we ask for a PPA, that where will you sell the power and at what cost will you sell the power. And a PSP project which does not have a PPA in place, it becomes difficult for us to evaluate those projects. We look at, we see that there are risks in working on that, and we would ask for various more collaterals, which he may not be agreeable to give to the lenders. Because we lenders see more risk if a project is without a PPA. But in case of battery, if there is, and if the RTC, if he wins and he puts plans to place a battery project, then it is maximum 1 year gestation, and he's there with, he comes to us with a PPA in place. So those, so there we are more comfortable in funding a battery project rather than a PSP initial stage. So the PSP developer needs to work out in the initial time how to work out their financials. They need to work on the financial engineering in the initial stage, because tying up funds for a PSP projects in the initial stage is difficult. And of course, for PFC or REC, we can work on this. But other lenders, I do have doubts that how they are going to work on this. So those things are, because we are the dedicated to the power sector, we understand the policies and what the government is planning and how the things are moving. But for other lenders in the market, it is difficult for them to evaluate such projects. Costing part, of course, is something which is challenge, where things are being worked out. Of course, the main attraction for PSP is for that they are there for 35 to 40 years, whereas the battery is life is around 7 to 8 years, or maximum 10, 12 years. So there is also degeneration in batteries. Every 3-4 years, there may be some, there will be some degeneration in batteries. So that is also there, where they'll have to keep adding some capacity in the battery every 4-5 years to make it, to average out the capacity. So those things are there, where they have to make capex during every 4-5 years. So cost and one point that is there, like PSP technology is already established in the market. It is there for quite some time, and we have been working. For quite a lot many years, it's there in the system. Of course, nowadays it has become attractive because of the storage, the capacity or renewable capacity that is being added into the system. Battery technology is also there, lithium ion, which is there, and it is coming in the country. But after its life cycle, the disposal of battery is an environmental issues that we need to discuss and elaborate on. The government need to come out with a policy, because after 5-10 years, when you want to dispose of these batteries with the cobalt, nickel, manganese, all these things, you need to have a proper system for disposal of batteries. Over the year, what we see now is that the PSP has become very, very attractive. Even the hydro developers who were looking at the hills to develop hydropower, now looking at pump storage projects. Because what we have been seeing over the this year also and a year before that, because of this natural calamity of cloudburst and flash floods and the hills and all, landslides, all these hydro projects are getting affected with the natural thing. So for a PSP, what is best is that they can plan in a region where they know what are the climatic conditions. There won't be landslides, there won't be cloudburst, there will be a nominal rainfall. So they can select a site where they are free from any natural calamity. So those risk factors are avoided when you go for a PSP project. It's a very fine point which they are considering. The PSP developers are looking at it. And if you have a natural PSP site which is having no climate extremes, then it is something which is very, very successful and can be implemented in a long way. So as a lender perspective, if you ask us, we look at it as a very great opportunity for us. Lenders.
Yeah, I think it's very heartening to hear that, the country's largest power sector lender is very optimistic. And I'm sure Rajat, Rohit, and Ms. Deshpande will all be taking notes. My next question is to Ms. Deshpande. Today you are wearing two hats. One, as a developer and also as a, proposed consumer of renewable energy and storage on a very large scale. Now, my question to you is that, for groups like you, which are manufacturing as well as labeling globally, how seriously you are taking, all these targets of, RE50, RE100 and complete decarbonization? And what exactly is driving your strategy towards, procuring more renewable energy with storage? Because we understand that you are one of the, pioneering groups as a consumer in terms of, of taking renewable energy and storage.
Yeah, Sabyasachi, so this initiative is definitely taken very seriously at the group level. We have, as a group, adopted ambitious targets, and essentially green steel, decarbonization, these are key goals that we need to move towards. For that, there are internally maps also which have been charted out, but essentially what we would want to focus on would be operational improvements. We would look at clean electricity, we would look at adoption of technologies for the purpose of reduction of carbon, CO2 emissions, and then also CCUS is being explored at the group level. So there are multiple activities which are being considered for this objective of decarbonization. With respect to the clean electricity, this is, of course, the first project which ArcelorMittal has set up in India. It's a 1 gigawatt size project which has been set up in 2022, and I think that's going to grow as a portfolio. And yeah, that's how I think the group is going to keep investing and move ahead.
Yeah, thanks for your perspective. Now, Rajat, I had a question for you. Obviously, we are seeing that obviously risks are relatively higher in the storage, segment. But let me try to flip the question around. I mean, we know that with the kind of tariff-based bidding which is taking place in the grid, the returns are really very thin. Then we saw platforms, including very large size platforms, trying to increase their proportion of CNI because that segment was offering much better returns than plain vanilla SECI or NTPC kind of projects. Now there also we are seeing some kind of a margin pressure and pressure on the tariffs, as off-takers are becoming more and more cost conscious. So does it mean that it could be one opportunity for developers like you to still get a higher return, because obviously there's a relatively higher risk in storage-based or RTC kind of projects. But if you're able to manage those risks, you could actually earn, higher risk return, kind of, on the metrics. So, what are your thoughts on that?
So, Sabyasachi, basically, one thing which is very clearly coming out is that it is not the return, but it is the informed nature of the power which is making the storage, as a inevitability, right? I'm saying, it is not just a return which is driving the storage projects, okay? And we have seen of late the increasing pipeline of tenders, which are moving now towards the RTC and the battery storage or pump storage, projects, all right? Now, the challenge to me is, in any case, the RE sector is a highly competitive, sector. We know the tariffs, and there are three developers here. All of us compete among ourselves, to get the projects, right? So, in our view, given the risk return profile, of a plain vanilla solar, for example, versus a say plain vanilla wind, and then if you look at a hybrid or a storage project, I'm saying, there's not much difference in terms of returns you'll get, especially if you look at the returns adjusted for the risk unit, all right? And the risks which are involved, okay, some of the risks which have been highlighted already by all of us is in terms of the capex, in terms of the site availability or the construction phase required for a PSP. I'm saying today a storage project is basically a combination of wind plus solar plus some storage element, whether battery or a hydro, for example, right? One of the key risks which we see coming out, I mean, solar is well established. Everybody is comfortable, pump storage, of course, we know the issues. Okay. Mr. Sinha clearly highlighted his preference for our battery storage projects because of the least construction time and higher visibility. All right. But then there's so much of uncertainty with respect to the operating cost, at what level the batteries will perform and how sooner you need to, recycle them or add to them. The other issue which we are seeing is a issue on the wind side, for example, right? I'm saying without wind, probably you cannot achieve a RTC or a storage projects. And today the issues with the wind is they are highly OEMs. There's no OEMs practically available who can undertake EPC projects. Probably today we have Suzlon in his refurbished Avatar available. Doing some projects, and probably one or two Chinese companies supplying projects. So no EPC undertaken. They're only acting as the suppliers of turbines, which leaving the construction and direction risk to the developers, who most of them may not have the experience of erecting and commissioning turbines, for example. So there is a huge risk in terms of the construction side of it, right? The second issue which we see, when you look at from a developer perspective, is that if you look at the different tenders which are coming out, each of the tenders have very different conditions, all right? Okay, some asking for a 2 hours, some are asking 4 hours, some peak hour, the type of penalties they impose on the developers, ranging from 1.5 to 2.5x of the landed cost, all right? So they bring in those uncertainties, and that's the reason you see many tenders going undersubscribed, okay? So there are so many aspects which we need to address, and therefore, in our view, I'm saying it is not that these the battery storage or pump storage or even the RTC, they offer you higher returns. I don't see that as a given thing. It's a and if any return which has to be looked into always has to be looked into a risk-adjusted return. So I don't think these returns profile of these projects would be any different from the return profiles for a wind or solar project. Rather, the investors would like more visibility on the returns, and less of risk, So those concerns needs to be addressed when people want more and more participation from the developers on these storage projects.
Thanks, Rajat. One quick question to Mr. Sinha. 14 lakh crores, that's the ask from the financial sector for funding all these RE and storage projects. So is the domestic banking system, are we going to be Atmanirbhar? Will the domestic banking system and the infrastructure financing system be able to provide all that money? Or will you have to be substantially dependent upon international debt funding also for the renewable energy projects?
See, funding has never been an issue in India. Like there are always funds. Depends upon the developers. In fact, they see most of the things are fixed. You see, if I look at a plain vanilla solar project that Rajat was talking, you see the panel costs are almost uh, uh, everything is which is very transparent in the market. This is the panel cost. This is the structure cost. This is the inverter cost. All these things are very clear in the market. Only thing variable is, and the land cost is something that they need to do work on. If all these things are frozen, only variable aspect is the financing cost. So that matters that goes into their bidding, whatever they have to engineer their bids and value and all. So they have to consider a value in their financing cost, and that affects. So financing cost is something that is the matter, and wherever it looks attractive to the developers, whether it's in the country or outside the country or some other instruments, bonds and other things, or investors, if they can attract with their reputation and with their background, so they go ahead. So what I look at it, if you look at Indian market, lenders, I don't see any issue. Funds are available. We can work it. That's not a
So I
Thanks.
just like to interrupt here. Sorry, I'm saying,
Yeah.
while
Yeah,
I
Rajat.
agree with Mr. Sinha that, yes, PFC, REC and other institutions are financing a lot and they're the forefront. But I think I would just like to use this forum to highlight that the structure of the financing, something which we all need to work upon, for example, right? Okay. Especially while the lenders today are comfortable lending for 20, 21 years, but I think the ring fencing in terms of the cash flows, in terms of the cash sweeps, in terms of the covenants they put in, the obligation of the promoter they put in. Promoter is already taking a huge risk in terms of, bringing in equity and taking the risk return profile of the project, and then to add on the obligation to always provide a support, for example, right? That's an indirect obligation, never a direct obligation required by the lenders, for example, right? Okay.
Mhm.
Even if a 20, 21 years loan is structured, but by imposing cash sweeps, practically you're reducing the average life of the loan to 10, 12 years. Okay. Here, all those things will make a huge impact in terms of the return and financing structures of these projects. So I think that's just a thought for all of us, since we are debating how to make them more attractive and competitive.
Only the variable factor is the financing factor. How you do your financing, that is
So, sir, I look.
the lender
Mr.
has
Sinha,
to
I'm saying-
design the instruments.
No, I agree with you. We can always talk it offline, etc. But I'm just trying to say that some of the flexibility in the policy framework, especially from the lenders like you, can help a lot. I'm saying where we see is that it's really the policies which which doesn't differentiate a project to project, and that makes sometimes a bit difficult to structure a project in a more optimum manner. That's one thought I'll just leave it for all of us to ponder about, and can we do it a bit different?
I won't debate on this point.
Yeah, thank you so much.
Thanks to both of you. One last quick question to Rohit before we go to the audience. You alluded, Rohit, in your first answer about, the developers having, various asks. So the top two asks in the order of priority. What are you have multiple asks from the government and the regulatory system, but the first top two asks.
Yeah, so the first one I would say is that from as a RTC developer, I would say not more as a storage solution operator, but as an RTC developer, if we have to today go and sell RTC power to anybody, people would like clarity about the ISTS waiver charges beyond June 2025. Whatever projects are right now done are done, but any new pipeline, that is something which is bringing in a lot of uncertainty about the pricing beyond that period. And given that most of the substation may not be ready before June 2025, that is one clear area where I think a directive from government saying that anything which is using a substantial amount of storage, this waiver is going to be extended for that. So that is the first thing I would say. Second is a more, I won't call it a very specific ask, but more generic in terms of, as I mentioned, the answer that people are looking right now for storage or RTC is that this is going to stay. So whether it is about more tenders or ensuring more stringent RPO or ESO obligations is what needs to be demonstrated. The government needs to demonstrate that we are there, we want to support this, and this is here to stay. Because see, while everything is done, but for example, the RPO ESO obligation, if you look at it, today there are loopholes wherein, it's not that the projects have to substantially use battery, storage facility. Even a nominal storage utilization can count there. So if really the concern is that we need to ensure our grids are more stable, we need to be more stringent about the RPO obligations for storage related plants, and we need to bring more tenders for storage related, whether it is PHP or batteries, as I mentioned, at specific substation, to ensure that the storage sector as a whole flourishes.
Thanks, Rohit. I really wish, there are many more questions I had in my pipeline, but unfortunately, as is often the case with such, webinars and events, there's seldom enough time to answer all the questions. So, Divya, now I hand it back to you for starting the question answers from the audience.
Thank you, sir. Dear participants, we are now beginning with the Q&A session. You're requested to key in your questions in your panel. Thank you.
Okay. So I see that there is a question from Sunil. Am I audible?
Yeah, Sabyasachi, you're audible.
Yeah.
Please go
So
ahead.
there's a question from Sunil on the how to de-risk the PSPs from external risks in the storage linked PPAs. So anyone from the panel would like to address this?
What is the question? Like, de-risk the extent?
Yeah, basically
external
whether
risk.
the generators with PSP are adequately protected against external risks such as ecological and hydrological in the storage linked PPAs.
Yeah, if they take the PSP thing, if they take proper care during the implementation, the site selection, they are protected from all these other risks, external risks like natural, as I told during my this thing, that the site selection, because they can insulate them from the cloud burst, what are happening, landslides, what happens in hills and all. So those things can be taken care of if they select the site properly. And moreover, during the construction, if they take care by properly insulating the tanks, the dams that they would be constructing, so that the seepage is minimum. So those if they take proper care, they can be free from any such external risk.
Yeah, thanks. The next question is from Mr. Varun Bang. His question is on the financing of these projects. Given that most of these projects are largely debt financed, how are companies looking at financing the projects? What is I think his question would be on what percentage they expect from banks, power finance institutions, and whether they are going to, raise it to the debt capital markets. And how viable and competitive is it to raise capital through capital markets, and what are the challenges? Rajat, you would like to take this question?
Sure, Pawan. So first of all these projects which are greenfield in nature, debt capital market is not available, at least in India right now. Okay, so you have to go to institutions like REC, PFCs, or banks for raising funds for these projects. All right. So debt capital market comes into play only once the projects have become operational, and then they really get stabilized. So that's one thing. And second thing is in terms of how do you finance them? Again, each project is unique. All right. Typically, globally, the projects are financed on a cash flow basis, where on the likely debt servicing targets, you can fund a project. But in India, still, the lenders are trying to cap the projects, or 70-30 or 70 or 25 debt equity in India, I'm saying. So basically, that's the way these projects are being financed today. And hopefully, I'm saying, as we evolve, all right, okay, some new avenues of financing may be available. Today, you can finance through rupee loans or multilats or foreign currency loans. Usual infrastructure financing approach for these projects as well.
Okay. So, there are a lot of other questions as well, and including some, questions which are very specific, to individual players, which perhaps we would best avoid at this moment. I would just take last one question. And this is a very interesting question, which, again, from Mr. Sunil Mari. His question is to Mr. Sinha: what would the criteria for providing debt financing for CNI projects with storage component? I mean, would you be
As of
comfortable with, CNI plus storage for the CNI segments, RE plus storage for
see,
CNI?
funding is totally based on the return and the IRR of the project. And we have not seen any storage project as of now in C&I sector. We have not yet funded, but yes, we can look into it. C&I, we have been doing quite number of projects, particularly wind and solar. But a storage, of course, we can look at it. Depends upon the PPA that they have, the power purchase cost that they enter into, and the power purchase cost, as well as the equity investment that is there from the C&I customer into the project. Those things we'll look into it, and then we can do that. That funding won't be an issue if you have a proper, robust power purchase agreement in place with the C&I customer.
Okay, thank you, Mr. Sinha. And thanks again to all our esteemed guest speakers for having taken their time out and sharing their insightful views and patiently answering all the audience queries. This is a very exciting topic, but unfortunately, due to the paucity of time, we are unable to take all the questions. Mr. Sinha, Rajat, Ms. Deshpande, and Rohit, it was a great privilege to host you. And thank you to all the participants for having taken their time out and being a part of this webinar. A special word of thanks are also due to my colleagues, Jatin and his team, for coming out with an excellent presentation. Now, I hand over the stage to my colleague, Divya, for her closing remarks.
Thank you, Sabyasachi, for moderating the session, and Jatin for your presentation. Once again, thanking all our guest speakers for their insightful views. It was genuinely a privilege to host you. And lastly, thank you to all the participants for taking the time out and being a part of this CareEdge webinar. For any further queries, feedback, or suggestion, please write to us in the feedback mail. Goodbye for now, and requesting the